Hello, everybody, and welcome to the show today. Today, we are talking about how you can get a business loan even when you think there's no way that you may qualify. If you're interested, if this makes sense to you along the way, feel free to get approved for financing at creditsuite.com/get funding. So for those that don't know me, my name is Ty Crandall. I'm actually the CEO at Credit Suite. And at Credit Suite, this is what we do. We help business owners get capital. We do so by helping you improve your fundability, the things that make you lendable, by building business credit for your EIN that's not linked to your social, which helps you get the most money at the best terms, and by also accessing all financing in one place to make it easy to get the most amount of money for your business. So if we can help you along the way, give us a ring, 877-600-2487. So look, when we talk about big conventional banks, we're talking about the big boys. We're talking about Chase. We're talking about Bank of America. Okay, we're talking about Regions and all those other big banks that you're very familiar with. So when we talk about these big banks, these conventional lenders are not the place you want to go unless you have really good credit, cash flow, and collateral. Especially if you're starting your business, these aren't going to work because they're going to typically want 2 to 3 years worth of tax returns for you to get approved. If you're lucky, you may get a credit card, but as we'll talk about today, there's better ways to get access to credit lines than even going through your bank to do this. So these are just not the places that you want to walk in the door to get approved for unless you have good cash flow, good credit, good collateral, usually 3 to 5 years down the road after you start your business. As a matter of fact, statistically, almost 90%, 89% of all business applications that go through these big banks are denied. So even if you get together all the documentation they need, almost 9 out of 10 of those never end up getting funded. So again, not the place to fish. We're going to talk to start here about where not to go and then talk about where you do need to go to actually get financing. So on these big banks, or when you look at lending, they're really looking at a few different things: that you have enough assets, sufficient financial reserves, enough personal collateral to ride out basic business fluctuations. Now, this is very applicable with the big banks. They really care about all this stuff. A lot of the alternative financing that we'll be talking about a little bit later today is not based on this. But when you're talking about the big banks, they're definitely taking all these things into consideration. And to prove that you can pay back the loan as agreed, they want to see that you have solid cash flow. As a matter of fact, this is the number one thing that lenders are really looking for. Any kind of loan, personal or business, you apply for, the number one thing they're really looking to see is, do you have what's needed to pay back that actual debt, to pay the payment? So when you have solid cash flow, that's one of the things they're looking for. Can you repay that loan? They want to see that you have a track record of profitability, that it's not just this month you're doing well, but they're going to look historically at what you've done over time. They're going to want to see the big banks that you've got success in a similar business endeavor. That's why when you go to apply for an SBA loan, they're asking for resumes with this information. Okay, essentially, all of this is designed to prove your credit worthiness and prove that you have the ability to repay that loan. Bottom line, conventional loans are hard to get. Okay, SBA loans are hard to qualify for. Okay, most conventional bank loans are backed by SBA. And what happens is both the SBA and the lender you have to qualify for. And then the problem is that they're going to evaluate every single aspect of your business, which means they're looking at your cash flow. They're looking at your credit. They're looking at your collateral. They're looking at all these things, and all these things must be perfect to get approved. Okay, if they're not, then what happens is you get denied. Okay, poor personal credit, your cash flow that's not consistent and growing month to month, no financial reserves, no collateral. These things mean you just cannot get financing at these big banks. Now, there are private investors, but a lot of private investors out there want to see that you've got tax returns for a few years as well. Okay, venture capital is also an option that's looking kind of at the same thing. You know, venture capitals want to see that you have a track record of success. So if you've ever watched the show Shark Tank, you've seen this where Mr. Wonderful will constantly ask that question. What are the sales? What are the sales? I don't want to see a concept. I don't want to see an idea. I want to see a real business, and a real business is generating sales. So again, venture capitalists, even if you don't have tax returns, they want to actually see that you really are able to produce the outcome desired. As a matter of fact, I had a gentleman on my podcast the other day that actually got a $250,000 investment from Mark Cuban. And one of the things that was interesting from this interview is he said it took 3 months from the minute he first went in from an interview until he was actually on the show. But it took 6 months for Mark Cuban's team to do the due diligence on his company to actually give him the money. which meant that it took a fraction of the time to get on the show as it did for them to actually look at his financials and everything to make sure the numbers he gave them were actually accurate and the business was doing what he said it was to make it really investable. So venture capitalists, again, they're looking for quick turnarounds. They want to make sure that you're selling this business in a few years. They want to get ownership interest in the business. So it's more difficult, even though you don't have to as much give up. You have to give up equity versus actually giving up a bunch of other things like paying an interest rate monthly on the money you're borrowing. But again, the problem with private investors, the problem with venture capitalists is they're still looking for financials. They're still looking at this track history to want to lend you money. But there's a lot of loans that other businesses can get, even including startups, even if you normally can't qualify for these big conventional bank loans. They're just not coming from conventional bank loans. Okay, they're $25,000, $50,000, $100,000, $100 or $500,000, $1 million in initial funding that you're able to get from other sources outside of these conventional banks. So, for example, you can get specialized financing to buy the things you actually need for your business. So if you're putting up commercial signs, well, there's financing for that. If you're trying to get a big piece of equipment, I've got friends that come to me and say, I want a loan to get equipment. Well, you don't want a loan or a credit line to get equipment. You want equipment financing or equipment leasing, financing that's specifically for the purpose of getting that equipment that you may need. Maybe you want, as marketing, to wrap the vehicles in your fleet with graphic wraps. Well, there's specialized financing for all these things. So the very first thing you should keep in mind is there specialized financing for what it is you're looking for? If you're a house flipper and you want to get the money to buy and rehab a home, well, there's specialized financing for that. If you need to buy commercial vehicles or refinance against commercial vehicles, well, there's specialized financing for that. We talked about equipment here. We talked about inventory, or we talked about equipment as well. Inventory is another option. Commercial signs. What do you need the money for? Look there first, because in a lot of cases, there are specialized financing that works just for that item that you actually need to buy. So let's talk a little bit more about some of these called collateral-based loans. Okay, these are basically where lenders are giving you money because you have some kind of asset you're pledging as collateral. So as a result of that, they're comfortable to give you money because they have something to take back if you default. These could be stocks, bonds, 401ks. They could be IRAs. They could be inventory. They could be purchase orders or account receivables where your customers are paying you on terms. Okay. They could be many other things that we've already talked about. Equipment. Maybe you want to get commercial signage. All these type of things are where you're using an asset as leverage to get the money. Okay, so the great thing about this kind of financing is you don't need to have good credit to qualify. In a lot of cases, they don't care about your credit at all. You also don't need to have consistent cash flow. You just need the collateral. And the other better news is that you can get interest rates typically of 5% or less and get loans or credit lines on this kind of financing. Now, you can also work with a guarantor. It's said that 75% of entrepreneurs get their startup capital from family and friends. But you have to keep in mind, your family and friend have access to these kind of assets as well. So it may make sense for them to leverage the assets that they have to help you get the financing, then pull it out of their actual pocket. Okay, and you don't have to give up as much money or equity as you would a venture capitalist. So let me give you an example. Let's say dad, okay, is going to help me get $25,000 to start my business. It's much easier for dad to pledge $25,000 worth of stocks and me get a $25,000 credit line than him give me $25,000 in cash. Why? Because $25,000 in his stocks gets me a low interest rate credit line. And the other cool thing about that is that nothing changes in his world unless I defaulted on that loan. He still gets to keep the stocks. He still gets to earn the interest. I get my 25 grand and it's no money out of his pocket. Much easier path than trying to take $25,000 out of his actual bank account, right? That means a lot more to him. So it's easier to work with guarantors that have these kind of assets to contribute than it is to actually hit them up for cash. And this is where 401k financing, stocks, bonds, IRAs, even having equipment, these type of things are very helpful. So when we talk about 401k financing, it's basically where you're using 401k or IRA to qualify for financing. There's no tax penalties. It's based on IRS proven strategies. You can still earn interest. You still get low rates, 5% or less, credit lines, loans, close in 3 weeks or less, and you can get 100% financing against whatever's rollable. So we had a client, for example, that could not get $25,000 credit line at his bank, But he was a retired police officer, had $750,000 saved. And through this program, we were able to get him a $750,000 credit line. He got a $750,000 worth of credit lines when he couldn't even get 25 grand in his bank. It's just a simple example of how this kind of financing can really help. Now, others are securities, right? These are stocks and bonds where, much like 401ks, you could still keep in place. You could still get a low interest rate credit line, but you can borrow as much as 90% of the value of the stocks and bonds. Close in a few weeks. You still get to earn interest on that money. Interest rates are as low as 1.6%, but oftentimes around 5% to actually get approved. And again, they don't look at cash flow. They don't look at credit to get approved. Now, if you let your customers pay you on terms, well, that's account receivable financing. It's used to be that you can get up to 80% of receivable financing, just changed up to 90% of financing that you can get against those receivables if you've been in business 1 year or more. It's got to be the government or another business the receivables are with, and your rates are very low. Factor rates as much as 1.33%, and you can get your money advanced in less than 24 hours. Okay, and the 80 or 90% they'll finance, you'll get the difference of that once your customer actually pays off that invoice. This is the number one kind of financing that people use to get SBA loans. It's also the number one kind of financing people use to buy other businesses. Very important. So let's say that you sell widgets. Let's say your widget company's doing pretty good. Let's say you got a neighbor that also sells widgets. His widget company's doing pretty good. He doesn't want to sell widgets anymore, and you want to buy his widget company. You could come in, and if his customers are paying on terms and he has account receivables, you could use that asset to get an SBA loan to buy his business. And when you do this, you can typically get this kind of financing with very little to no money down at all by using the other company's assets. So it gives you the ability to purchase a business instead of starting one, or purchase another business for assets and things they bring to your organization instead of trying to grow that fast. Okay. A lot of people don't know that, but that's how a lot of businesses that scale very quickly do so. They're buying other assets. Look at Facebook buying Instagram, for example, right? So they're doing that so they can increase their user base and grow faster. So you can use this as a way to purchase other businesses as well. Okay. So you can get loans or credit lines with this kind of financing as well, and up to 90% financing. If you have inventory, you can use your existing inventory as collateral to get financing, or get the money you need to buy inventory. So we had a client that wanted $1 million credit line with the SBA. I said, what do you need with $1 million? He said, I have inventory issues all the time. We have to put the inventory in, and then the inventory goes. We need more money. Well, you don't need an SBA loan. You need an inventory credit line. Okay, so that means use the inventory you have to get a credit line, and then use that credit line to actually buy more inventory when it's needed. Now, for this to work, you need about $500 million worth of inventory or more. But if you're in a business that deals with high inventory, you can borrow as much as 50% of the value of that inventory and get a low interest rate credit line. So again, really good way to go if you have inventory that can help you qualify for financing. So equipment financing is another way that you can get the money you need to buy specific things. You could buy or lease equipment. You can get approved for as much as the first and last month's payments. Okay, usually you get interest rates all over the board because it works for good or bad credit. They do want to see people with 650 scores or higher, but even with 580, you're still able to get approved. And you can even use equipment you already own or somebody else owns as collateral and borrow against it, called equipment sale leaseback, and get as much as 50% financing against equipment you already own. And you could do this up to $2 million, in some cases even more. So again, if you own that equipment free and clear, this is called equipment sale leaseback, where you're basically taking the equipment that you already own, you're selling it back to the lender. And then what ultimately happens is then you're basically buying it back from them, or equipment sale leaseback, you're selling it to the lender, then you lease it back from them. And once you make all your payments, the equipment is yours again. So it's a really cool way to use equipment you already have as collateral to get financing. So maybe you want to flip properties. Well, there's also financing that if you have some cash and some experience and average credit, you can get the money you need to actually flip residential properties. You can get all the money you need to buy and rehab the property. You can get financing against commercial real estate as well. Okay, so you can use commercial real estate. As a matter of fact, one of the most common loans we're doing right now is we're going to people that actually lease their current property. They're able to buy the property from their landlord, and their payments are staying about the same as they are now, sometimes less, with no money down. So imagine that you're leasing a property. You could go to your landlord and buy that same property, lower your payments with no money down. So using commercial real estate as collateral to get financing. Maybe you're a real estate agent. Well, you can use your book of business as a real estate agent to get financing. You can even come in and use the book of business for another insurance agency to borrow, to be able to buy that agency if you wanted to. SBA has micro loans, which could be an option. These are called 7M. 7A is their most common kind of loan. It's a working capital loan, which just means you can use it for multiple purposes. But the 7M micro loan is another great program where you can get loans up to $35,000 with average loan amounts of $10,000, and you're getting the funding directly from SBA. So you don't have to qualify for a big conventional bank loan and SBA loan. You only have to qualify for actual SBA loans. Okay. So cash flow financing, another option. Okay, they typically will want you to be in business about a year and have $10,000 a month in deposits, but they'll work with you even if you have poor credit. Most of them start at 500 minimum FICOs, and a lot of them don't even have credit checks at all. Okay, so there's a great way to use your consistent revenue to actually get approved for financing. Now, with these, they're looking for responsible bank account management. They want to see you have going more money in the bank account than you've got going out of the bank account. They want to see that you don't have a bunch of non-sufficient funds and overdrafts. They just want to see responsible bank account management. And if you have that, you can get approved without even supplying tax returns, just based on your revenue. Now, again, as I said, if these make sense to you, feel free to go to creditsuite.com/get funding. With a handful of questions you fill out, we can get you approved and tell you all the financing options you have beyond just some of the ones we're talking about today. You can also go to Square and PayPal. Both of them offer loans with no credit check. It's a great option even if you're just starting your business, because about 3 to 6 months in business, they can still help. Okay, usually the loans range from $500 up to $100,000, and eligibility depends on your sale history with Square or PayPal. Okay, so you can go to square.com/capital to learn more about that. PayPal also will allow you to get as much as 30% against what you're running through a PayPal account. That's huge. When we look at revenue lending, they'll only lend about as much as 12% of your annual revenue. PayPal's nearly 3 times that, and they'll lend up to $500,000. Okay. But again, in a lot of cases, they're going to want you to be in business a little bit longer, 6-9 months time in business to be able to get approved. Okay, so I love PayPal and Square. I advise all of our clients, go get a PayPal and Square account, one or the other, and start running some of your money through one of those two accounts. Okay, then that way, this opens up all kinds of low interest rate, easy to qualify for financing for your business. My personal favorite kind of financing is called UBF, unsecured business financing. This is where you can get about 5 to 8 times the amount of your highest credit limit account you have now. So if I have a credit card with a $10,000 limit now, I can get about $50,000 to $80,000 in financing using this, 5 to 8 times my highest credit limit. 0% rates for up to 18 months. You can get, and this is a misprint, you can actually get up to $150,000 with this kind of financing. No collateral is necessary. No cash flow is necessary. So it's unsecured. And the other benefit of this is it's no doc. You don't need bank statements. You don't need tax returns. High risk industries can get approved. Nonprofits can get approved. Startups can get approved. The other cool thing I like about this program is that these credit lines you get report to the business credit reporting agencies. So you're building business credit at exactly the same time that you're accessing the money you need to grow your business. All that's needed here is good credit. A 680 FICO score or higher, typically less than 6 inquiries in the last 6 months, 30-40% utilization. If you have that kind of makeup, you could typically get approved. But here's the cool part. Even if you don't, you can still get approved. You just use a guarantor. Go to mom, go to dad, go to grandpa, grandma, go to friend, go to somebody that wants to potentially invest in your business. Any of these people can be guarantors, and you can use their credit to then qualify for financing as well. Let's not forget about business credit. This is credit that's linked to your EIN, not your social. It's credit that's available without the personal guarantee, without the personal credit check. You can get it as a startup. You don't need to verify cash flow through bank statements or tax returns. Okay. And it helps throughout the lifetime of your business. No matter what kind of financing you go to get, you still need to build your business credit, because if you don't do this, it's going to limit how much money you can get, and it's going to make your terms way worse than they would be. So for example, you can't even get an SBA loan without having established business credit. And let me give you an example of 2 kinds of financing. One we secure a lot of financing for Credit Suite because we like to test things for our clients. So we went through and got a merchant cash advance, $75,000. Okay. Revenue lending, I think a 2 or a 3 year term. I don't know what it was. And the payments ended up being almost $10,000 a month for $75,000 in financing. Then we went and got an SBA loan using our business credit and other factors to qualify. We got a $325,000 loan for $4,000 a month. That's how important terms are to your business. One gave us $75,000 with a $10,000 monthly payment. One gave $325,000 with a $4,000 payment. The difference between those is a more qualified company to get the SBA loan, including business credit. That's what business credit does. It helps you get access to more financing and better terms. It's also a great way to get money for your business when you can't get other kind of financing. Because as we talked about so far, you need to have good credit or cash flow or revenue to qualify. But business credit, you don't need cash flow, you don't need credit, you don't need collateral. It's financing anybody can get, even as a startup, even as a nonprofit, even as a high-risk industry. Conventional banks, as a recap, not the place to go. If you have good cash flow, if you have good credit, if you have collateral, they are. If not, don't. So private investors, same way, venture capitalists, they're all going to want to see a track history, tax returns. They're going to want to see that you've been successful long term. Instead, get creative. Think about what it is you need to buy and go get financing for that, whether it be equipment, or whether it be inventory or commercial signs or wrapping commercial vehicles. Get the financing that's specific with that, or borrow against the collateral that you have to get financing, equipment, inventory, stocks, bonds, 401ks, IRAs, purchase orders, account receivables, commercial real estate, commercial vehicles. All those can be used creatively to be able to get financing. Okay. Also cash flow. If you have consistent cash flow that's verifiable per your bank statements and you manage your bank account responsibly, that opens up an option. And you can try SBA loans, but if you're going to try there, maybe try micro loans to start with if you don't have the cash flow, credit, or collateral. And don't forget my personal two favorites. Go to PayPal and Square first, because if you have money going through there, it's some of the easiest financing you're ever going to get. And also, don't forget unsecured business financing. This is great if you have good credit or a guarantor that does, and never forget business credit. Business credit's so important. I talk to so many people and say, why do you need a $10,000 loan? And they say, well, I need $5,000 to set up my office, and I need $3,000 for marketing, and I need another $2,000 for furniture. Well, you don't need a $10,000 loan. What you need is an IKEA credit card, a Best Buy credit card, a Sam's Club credit card. All those can be obtained without a personal credit check and without a personal guarantee, and are much easier to get approved for than you're ever going to find that you're going to be able to find if you're going to get loans and credit lines. So use business credit to help you become more lendable, and use business credit to access financing for the things that you need without tapping into loans and credit lines, and to get financing when you can't get financing through the big banks as well. Okay. So get with us, just so you know, you get access to every legitimate funding program in one place. We never charge fees for financing. It doesn't mean the financing's free. You still have to pay the lender their points or their interest rate or their fees, but we negotiate that for you. You'll never pay us a dime to help you with business loans and financing. Okay, you can also use our loan volume. We do so much through these lenders. We typically get you better terms, and we develop the blueprint to get you all the money you can get now and graduate all the way up to an SBA loan. Our goal here at Credit Suite is that you've got one source that can help you with all aspects of getting the money you need, so you never need to look for funding again. So feel free to get in touch with us and let us know what we can do to help you get financing. 877-600-2487, info@creditsuite.com, or go to creditsuite.com/get funding to get approved now. And don't forget to, while you're at our website, creditsuite.com, click on the top right of our page. That's where all of our social media links are. You can follow our daily tips on Instagram and Twitter. You can see hundreds of hours of training videos on what you need to do to get approved on YouTube. You can see us go live on YouTube and Facebook weekly as well, all by accessing the links at the top right of our page at creditsuite.com. Thanks everybody for tuning in very much. Again, we are here to help you, and hopefully this provides you some guidance on different ways you can get financing to grow your business.